A blowout month for private sector job creation. The nation's employers went on a hiring spree in February, beefing up payrolls by a lot more than expected. Private payroll processor ADP says 298,000 jobs were added last month. The estimate was for 188,000. That makes February the third best month for job growth since the recovery began back in 2009. And now, as Steve Liesman reports, the bar is high for the Labor Department's employment report due out Friday and, of course, next week's meeting of Federal Reserve policymakers.
Is the jobs market getting a Trump bump? Jobs look to be getting stronger, and economists are trying to figure out whether it's a temporary blip or a new trend that means more growth and maybe faster interest rate increases. The payroll company ADP reported today it expects private payrolls to rise by 298,000 in February. Its much-followed estimate for the government jobs report on Friday was more than 100,000 higher than what Wall Street had estimated.
It's a big number. It's 3 times the rate of job growth necessary to absorb the growth in the working age population. So, any slack in the labor market, it's being absorbed very rapidly.
If the strong growth is confirmed on Friday, it will mark a reversal of the slowing trend from earlier in the year. And it comes when claims for jobless insurance have been running at levels not seen since the early 1970s. It raises the question, is confidence brought on by the expected policies of the Trump administration already showing up in hiring?
I do think businesses are anticipating a lot of good stuff, tax cuts, less regulation. The bottom line is the economy is fundamentally strong. It was fundamentally strong before the election. It's fundamentally strong after the election.
Now, another factor, warm February weather, leading to lots of construction hiring and jobs in leisure and hospitality. And it looks like for the first time in a while, global growth is helping, not hurting U.S. growth. For some on Wall Street, it means the Fed is going to have to get more aggressive.
You have inflation contributing, you have jobs contributing, and then you also have the potential of what's going to happen here domestically regarding any policies that the Trump presidency puts in place.
What that means, if job growth stays strong, the Fed may be raising interest rates as many as 4 times this year, or a full percentage point, double what the market was looking for in January. For Nightly Business Report, I'm Steve Liesman.